Good afternoon, traders. It's Bill Baruch from Blue Line Futures, and it's your midday market minute. Happy Fed Day. They announced an interest rate hike at 1 p.m. Central Time. This is expected, but as we've been saying, it's all about their tone, all about their expectations going forward. We think we'll see a more cautious tone from them, something that really talks about slowing growth potentially from the tariffs, the escalation of the international trade war right now. So I think we're going to see more caution as we headed into here in the preceding months. I do believe that the Fed was expecting the trade war to have a better light at the end of the tunnel than we see right now, and instead conditions are deteriorating, and there's really not much positive news recently on the NAFTA front. So I think the caution that the Fed can really talk about here, or they're going to exemplify, is going to actually put pressure on the markets. So even though they're pressure on the stocks, that is, even though they're more dovish, this concern is going to bring valuations down. On the other end of it, I think the concern that you're going to see from the Fed is going to lift treasuries. You're going to see yields back away from from the numbers we've seen recently. We're going to see gold get a bid, and we're going to see the dollar move down. The dollar does have some resistance here at 94. It's stalling at today after a little bit of a positive start to the session. So that's exactly what we're looking for later today. Give us a call. We're here to help on it as the data comes out. And then lastly, we'll talk on crude oil. It's starting to back away. It's below $72 right now. A little bit of choppiness after the number. You have a build, another surprise build, but this was less than the API number yesterday, so the expectations were for a draw. Headlines here, ultimately not bullish. You are seeing a bigger draw in the distillates that's offsetting it. So when you compare the EIA number to the API number yesterday, it's not as bearish as API. However, when you get into the numbers, production picked up, estimated another 100,000 barrels per day. On top of that, we did see imports drop, which, you know, when imports are coming in, that inflates what we have on inventory, and exports picked up. So ultimately, the numbers, when you get into it, this is more of a bearish report. You want to see how this crude oil tests our major three-star support. We have that on the Morning Express today. Look for that. Give us a call. We're here to talk about it. 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of research there. But remember, futures trading involves substantial risk of loss. It's not suitable for all investors. Thank you.